Hello viewers, in this video I'll be going over Gold Miners Jr. ETF ticker symbol GDXJ. Today we are up 1% on the 1 hour chart. We are approaching positive MACD, and on the 4 hour chart we are also seeing a convergence after diverging earlier in the week, or on Monday we start to see convergence shaping up on the daily chart. We are still negative on the daily MACD. We converged last week back in October 24th. So hopefully this trend is still intact and not descending or degrading this overall trend to downward point. So at the moment we do see a possible resistance as we got rejected last week in October 25th. We did not close above the 50-day moving average, this yellow line, and so that is our first immediate resistance that we need to break above to confirm that this uptrend is still intact and we can make new highs this year. So we have the resistance, and as for support, we've been making very decent support levels around the price of, I would say, $30.20, and this support also coincides with price concentration that dated back to early or mid-July all the way to September, late September, and mid-October. So if we were to move on higher, that price movement is roughly around 1.6 or 1.7% move higher, and to the downside is roughly 4.1% to the downside. So let's head to the forecast model. On here I'll go day by day, where GDXJ or Gold Miners Jr. will head to the next coming days. So this forecast model is now available in the link below for free, so check it out. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. And this trend dates back to August 30th to November 24th, 2017. So let me point out why these two charts are similar. So what we have in the beginning of the trend, we start off above the middle Bollinger Band, and then we proceeded to break down to touch the bottom Bollinger Band. So let's just mark all the instances where it touches the bottom Bollinger Band, and we have one there. One could say it's fairly close to the bottom Bollinger Band. I'll just mark it as dip as well. So we have those three there, and then let's mark where it reverted back to the mean or hit the middle Bollinger Band. So we have one there, and then finally one right here, and then lastly right towards the end, or where we are currently are at. So the trend in question, so let's examine it. So what we have, we start off upper Bollinger Band, and after that we slightly touch the middle or bottom Bollinger Band, and we see another instance right down here once more near the end, not quite touching the bottom Bollinger Band, but a decent dip far away from the middle Bollinger Band. So we have those one instance where it reverted back to the mean, and then finally we have one more right towards the end. So what we have currently are 1, 2, 3, 4, 5, 6, 7 points. We also have 1, 2, 3, 4, 5, 6, 7 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was August 30th to November 24th, 2017. Back then, I would say Gold Miners Jr. was down roughly around 4.3%. So we may head a little bit lower in the next coming days. So to look into a possibility, we may descend lower or possibly head back to where I marked a support level back in the technical analysis. So this forecast model is for free, so check it out in the link below. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.